All right. Episode 37. I have taken over the hosting duties and I'm never giving them back. So buckle up. We're going to get started right now. All right. Welcome back to episode 37 of the More Doors podcast. I am Brian Force and I am so alone today. If I didn't have beautiful Jesse over here keeping me company, I would be just all alone in this room. Matt and Nick are out on spring break. I do not have children, so I take no breaks. But today, I shouldn't say that. I'm not alone at all. Today we have an amazing guest. Mr. Jens Nielsen with Open Doors Capital is joining us to talk a little bit about his journey, his business, and I'm very excited to dive in. But first, we have to thank the people that make this possible. That is the partners over at Deep Blue Capital. Make sure you check out deepbluere.com. Go and register over there. Create your investor profile. We've got some big news coming for some new offerings that we're going to be blasting out here very shortly. And then when you're done with that, go over to Tore Studios, Tore Studios. Connect with Jesse over there. Get a podcast just like this or whatever your multimedia, YouTube, Instagram, whatever needs are creating and cranking out all kinds of content over at Tore Studios. So make sure you go check that out as well. All right. Without further ado, I'm going to bring Jens up here. Mr. Jens Nielsen, welcome to the show, brother. How are you?
I'm great. Thanks, Brian. Thanks for the enthusiastic intro. I love it. This is going to be a lot of fun.
Absolutely, man. Thanks for keeping me company today.
I don't have any kids either, so
there you go. All we do is work and keep pounding the coffee.
That's right.
Well, like I kind of said off air, I never like to dive into people's backgrounds for them. So for those who don't already know about a little bit about you and your business, kind of share your story. I know you're originally from Denmark. Kind of give us your background. Who is Jens?
Yeah, well, thank you. Yeah, so born and raised in Denmark. I have been moved to this country in 1996. So it's been a couple of years. Given the gray hair, I have reached my I guess sixth decade. I'm 52 years old, right? Been here a long time. Did the traditional thing, came here, I actually didn't have a college degree when I first moved here. So went through college, got my undergrad, my graduate degree, and worked in IT for 27 years, really, well, I worked, overseas before I got here, but worked many, many years here. And in my mid 40s, and it was great, right? I mean, my wife, we got married, many years ago. Well, she has a great job, great education. Same for me. So we're kind of stuck in the American dream, right? Hey, we had houses and cars and trips and everything's and debt and all those things that we thought we were supposed to do. And it was a great life, but we didn't have the freedom, right? We couldn't just travel when we wanted to because of the lack of vacation. My family's still back in Denmark, couldn't go and visit them and stuff, but I didn't really know what the solution was until about 8, 9 years ago. I was like, wow, real estate investing is actually, that makes a lot of sense, right? I picked up the book by Brandon Turner, How to Invest in Rental Real Estate, I think it's called. And that literally changed my life because I saw, oh, here is a way to decouple my time from my income, and started slow. Like I think about 8 years ago, bought our first rental property. I was living in Southwestern Colorado in a small town. The closest bigger town was actually Albuquerque, New Mexico. So I bought some rental properties back then in 2016, 30K a door, 40K a door.
Wow.
And kind of just it's like, wow, this actually works, right? I found a great mentor and property manager and broker, and now also partner. This individual is 80 years old, but he's still going strong. And so I got into it that way, got a couple fourplexes and 11 units, and then also did a joint venture on 38 units, all in Albuquerque, New Mexico, right? And I was like, wow, this is really fun. I enjoyed it because, I'm a numbers guy. I like to analyze things. So you analyze the numbers, you put it to work, you put people in place, and you can leverage other people's time, and you can start decoupling that that time from your money. And it's funny, I just today got I really only own, well, we have 65 units there. 19 of them are, sorry, 25 of them are our own. I got my monthly distribution today that literally pays, just from those units, that literally pays our expenses. So we are financially free and
Hey,
just having 25 units. Now we have 2,000 units that we've syndicated.
sure.
So it's not just those 25, right? But just having them had them long enough and had paid down the debt and refinanced them and upgraded them and improved them, they're doing amazingly well. So it's really cool to see that. But of course, that wasn't enough, right?
Yeah.
25, 27 units plus some partnership wasn't enough. So I got into the syndication, the private equity space in kind of 2018. And 2019 really was the first, started, raising money, doing partnering with people. And we've since done, I think, 2,500 units we have purchased, and we've sold about 500 of them. I think we have about 2,000 now, mainly some in New Mexico, some in Oklahoma, some in Ohio, some in Pennsylvania. So kind of up and down the road. So I retired from my job. I left my job like 3 years ago. I do this full time. I'm also a coach and a mentor. So a lot of different things, right? I wouldn't say I am don't work. I work a lot, but I do stuff that's for myself and for my business. So I love that.
I love that, man. And there's so much there. I appreciate the backstory. Congratulations on the distribution check. And the first question is like, what does it feel like to not stress about finances all the time? It's like so many
I mean,
people that come from that space. It's like if you don't get that paycheck, you're
yeah,
constantly stressed.
absolutely. I mean, it's, we had some goals there. It's funny. We had some goals early on. It was going to take us 10 years to get to that financial freedom.
Mhm.
And, we're 8 years in and we way exceeded that number. I mean, way
Man,
exceeded what we thought was possible. So it's been
congratulations.
great.
You
Thank you.
you you are a prototype for a tech industry, probably high income earner, transitioning into being a real estate entrepreneur, and that's such an awesome path. And I have a lot of questions about that I really want to dive into because that's part of our investment thesis and our partnership as well. But the first question I have is really moving from single family rentals to some quads and then building that up 25 units, right? And then going a little bigger, joint venturing on a 38 unit, making the leap into a syndication space where now you're syndicating thousands of units. What was the catalyst for that? And then what was the mindset shift that you needed to embody to go, okay, we're ready to take on bigger projects and I'm not going to shy away from it out of limiting beliefs.
Yeah, no, that took a lot, right? I think I early on realized that I couldn't do this with my own funds, right? I mean, we bought a few deals early on, and we're like, well, crap, we out of money now. What do we do next? We actually, and bless my dear wife. I mean, see, we actually sold. We had a very nice custom home in the mountains of Colorado that we sold and put that money into real estate back
Wow.
in 19 or was that was before the pandemic, so it must have been 19. Yeah,
Okay.
sold it and put it into real estate. And so we took, we made some sacrifices there to start having some money there. But I think to get back to your question, what was the mindset change? Well, I had to get around people that were doing this because again, living, and I'm talking about the 20,000 people town, right? Durango, Colorado, middle of nowhere. There aren't anybody doing syndicated deals there, right?
You're
So I
right.
had to get around people. So it always starts with education. It starts by getting around people that are doing what you want to do. And I'm not talking about looking at Grant Cardone and say, oh my God, how do I get to that? No, look at somebody that has maybe done one or two deals that are a few steps ahead of you and start saying, well, what were the steps you take? How did you get there? Because that's much easier to bridge that gap than a gap to, a BlackRock or a Grant
Right.
Cardone kind of thing, right? So you have to do that. So I would travel, I would go to conferences, I sign up for a mentorship program just to get around people, to get in that group or in that network or around people that are doing it. And I think when you go there, you have two choices. You either like, well, I want to try to keep up with people that are a few step ahead of me, or I want to just say, it's not for me, and then flush back and you leave, right?
Sure.
But that was kind of the thing that really pushed me.
Yeah, 100%. And that's such great advice, right? And to make that actionable, I have nothing against the coaching space. You're a coach as well. I think everybody should have a coach and a mentor and things like that. I also do believe that before, if you're looking to really get into the syndication side as like a GP and you really need guidance and mentorship and coaching around it, I'm not saying shy away. We've had many coaches on the show, and I very much believe in that space. I also believe in the value of, like you just said, finding a local mentor that can help you get started with the things that maybe coaching doesn't always provide. And what I mean by that is, like, when we did our first syndication deal that I was a GP on, a lot of things that I was new to, it was like, okay, like we got an LOI signed and now we need to negotiate the PSA, right? Like, what do I need to expect from our legal team as far as like going back and forth with theirs and like redlining documents and how do I understand this and like logistical things that there's a ton of value in coaching that's a little bit higher up here, but I meant like because I had partners who had done deals before and were very experienced. I learned so much about the pacing and cadence of a deal that now going into every other deal, like I can run a deal by myself, no problem now. And there's so much to that I think creates those limiting beliefs of just like, I don't know what to do next. And then people don't take any action. So finding a local mentor is such a valuable practice because it helps you with those little details that add up to you not taking action, and I think that's really important.
Absolutely. There's a lot of scary steps involved in doing a deal, right?
Yeah.
Yeah, and absolutely. Even just in my early days, right? Before I started this, and when I was like even starting investing, I was like, who do I know in my local community that's doing what I want to do? And I found, a guy I'm a very active cyclist, and somebody I knew. I was like, oh, I think he owns some real estate, and I connected, and he owns a bunch of multifamily and mobile home parks and stuff like that. And I basically was like, hey, Gage, let me take you out for lunch or dinner. I think it was. Let me take you for dinner and kind of pick your brain, right? Because most people want to help, most people want to share. And I think just asking, having the courage to ask the people that are around you and getting those. So, he was a mentor for me for years. We would meet every month until I moved. I live somewhere else now, but we just meet and talk about it. And same thing with my property manager and partner down in Albuquerque. He's 80 years old, and I still, go and take him for lunch and meet with him and stuff. So that's incredibly important. And as you said, my first deal, of course, I was not the lead KP or GP on it, right? I was kind of tagging along to see what that looked like. And then over time, right, going to having to do more and more and get bigger slices of those pies. I've still never done a syndicated deal by myself. I always want partners because I know I have a lot of shortcomings that I'm trying to find partners to kind of make up for.
I honestly, I would say, I know people that have every syndication deal, you're essentially buying a business. And so I would almost, I know in my career, I'll probably never do a syndication deal totally on my own because I don't run every part of the business well. I think you always want partners that complement each other's strengths. Um, but so you move into the syndication space. What is that first capital raise like? How does that go? Who are you raising money from? What's the deal? Kind of give us a background on that first deal you did.
Yeah, no, I was super excited about the first deal. That was in 2019, early 2019, right? Luckily, I had prepared because it's, how do you go from being an IT person to somebody raising money on a deal? That's a mental leap for anybody that want to invest with you. So I had spoken to everybody that would stand still long enough to say, hey, I bought my own stuff. I'm in this space. I am going to start offering, opportunities to invest. I'm not sure when that is. And I had the blessing, I've done it for a couple of years kind of by myself. So I wasn't a complete newbie in the sense that I owned properties, that gives a level of credibility. I know not everybody can do that, but just start positioning myself as more than the IT guy, the cyclist. So that first raise, it wasn't, I think it was $350,000 I raised. I just reached out to some people that I knew were interested in it. And so, I had enough credibility plus the team and the deal itself. This is a deal in Atlanta, great looking deal. And they did amazing. We sold a few years later. Just reaching out and start creating that. First of all, having the courage to reach out and ask.
Sure.
These were friends and family. I mean, not family, but friends and colleagues, and
Sure.
coworkers, and stuff like that. Right? But just reaching out, and don't be afraid of a no. Right? I mean, you're
Yeah.
not any worse off if somebody says no. So
I love that. I mean, you're echoing with so many of our guests that have told a very similar story, right? Which is we're always kind of looking for this magic bullet, especially to capital raising, this secret that nobody's thought of, and everyone has the same conversation. How did you end up raising $50 million over the last few years? Well, I talked to a lot of people, and I wasn't afraid to hear no. And so you get through the first capital raise. Sounds like you've gone full turn on that deal now, correct?
yeah, we did 3 deals in the first year, and we've sold all of them since then. So it
Congratulations.
was 212 units in Atlanta, 235 units in Phoenix, and 205, I can't remember, something like that in Erie, Pennsylvania. So
Oh,
all over the country, sold them all. I mean, I think the Phoenix deal is like, it was a 3.5 multiple in 3 years. I was like, oh my God. I
wow.
tell my investors, don't expect that again. But, so that was amazing, did really well. Right. But that also taught me that year, like, wow, this taught me that what's possible. It taught me that this is something that I want to dedicate more time to.
Right.
And I also started to figure out what can I truly add um, to these teams, right? And I learned that I can decent at raising capital. I can underwrite deals. I can asset manage. I'm very good at all the back end stuff
Mhm.
like budgeting and systems and investor portals and legal documents, all the
Sure.
tedious stuff, because I have the patience to deal with all that, right? So then that has then increased, then created some really good partnership, which has then allowed me to do not necessarily bigger deals, but getting a bigger slice of the pie, if you will.
Right. Absolutely. So bigger for you. And that's a great insight. What I'm always interested is as people scale, systems become very important. A conveyor belt, a way of doing things becomes very important because you're going from, I call it going from E to P. You're going from entrepreneurial to purposeful. You're having to build systems around your natural born talent to maximize it and get more done. So, and nowadays in the business, what do your systems look like as far as you do deals all over the country. So how are you finding deals, underwriting them efficiently so you're able to get to LOI stage before it gets too competitive? How are you creating systems around capital raising, asset management? What does sort of the breakdown of the business look like today?
Yeah, I would say I'm not the guy that goes out there and finds the deals, right? I typically have partners that brings me deals, because apparently that's not my strength. So but once the deal comes with me, I'm very good at putting the business plan together and said, okay, we look at a deal, what is this going to look like? So I'm very involved in the initial phase of that. So basically, I wouldn't say that's a system so much. That's just the experience of being creative and say, okay,
Sure.
we can buy this property. What is that going to look like? Right. So I don't, so that's really where I add my first, the value I add early on is like, what is the business plan for this? Right.
Right.
And then I typically allow my partners to put in the LOI and then when we get to contract stage, right, I will work with my partners and our legal team to, you know, um, negotiate the contract and so forth.
Right.
And then I spend I mean, of course, we have a capital raising platform. We use a portal for our investors. I set up all our webinars and create all the promotions for a different deals. So I do a lot of that promotion, the marketing, setting up, making it ready for investors to be as frictionless as possible.
Right.
Work with our lenders, right? And then once we close, I do spend a lot of time on asset management. So what systems do we use there? Well, we have Asana in place. We have weekly dashboards that we get out of our property management software, weekly or monthly meetings to asset manage and so
Yeah.
forth. Right? Really keeping the property managers accountable to our metrics and so forth. But it's interesting, as I have I have pulled away a little bit from some of that day-to-day stuff because I don't actually enjoy it as much as I do more the bigger picture thinking and my coaching business and so forth.
Sure, 100%. And you touched on something that I really want to circle back to just for a second on the actionable side for GPs and sponsors, people putting together deals. It's so important to have someone like you because there is almost nothing that will turn an investor off from your deal than a really murky, roadblocky experience to invest. If you can't create a frictionless investing experience where you can go to the deal room, access documents and information, connect your account and do all that, like it's every time someone has a roadblock there, you lose credibility as a sponsor in my eyes because we live in a society where I could click one button and order any product in the world and it'll be overnighted to me for free, right? If you can't create that frictionless experience, find someone who can because it's so important. The user experience is tremendously important in today's investing world.
Yeah, I couldn't agree less. And
Yeah.
I've had actually one of my friends created the investment platform we use, and I also invested in it myself, right?
Oh
So I've
wow.
had the experience to see that, and that's pretty cool
Is
to
it
have
is
that.
it available publicly? Free plug.
Yeah,
What do you
yeah.
guys use?
Syndication Pro.
Syndication Pro. Okay.
Yeah.
Yeah, I know plenty of
So,
people that use that. Okay,
yeah,
fantastic.
yeah,
Excellent, excellent platform. So you sparked my interest a little earlier when you kind of talked about a little bit about your background, being in IT and things like that. When you started raising capital, and even now, what is your sort of target avatar, investment partner? Who are you looking to help try and grow, their wealth and help their financial future?
yeah. I think initially you just anybody who wants to invest with
Sure.
you, right? Not, I mean, um, so I think what I have investors that goes, from nurses to doctors to, I mean, business owners. I have a friend who sold a $50 million business, so
Wow.
it goes across the gamut. But I think my best investors and the ones I like to work the most with are people that have a significant kind of disposable income, right? So those are business owners, doctors. I have a doctor, I think he's invested in me 10 times now, right?
Wow.
So people that can come back because it takes a lot of effort to acquire an investor, so somebody who can come back. So I think my best investors have also coworkers, old coworkers have invested with me. So I think having the trust in, hey, you're in IT, I'm in IT, right? And or was in IT. So that I wouldn't say I'm like incredibly targeting the only going to get invest doctors invest. I mean, basically, people that have the wherewithal to put this money and know it may not really, could take have the patience and everything else. So, but I
Agreed.
do like those investors that continue to come back and can do multiple investments over a period of time.
Absolutely. Well, I think there's a whole, it might not feel super targeted, but I think there's a whole demographic of our society that is a doctor's a great example. When we start out raising capital, we tend to get, we form some limiting beliefs around making those calls and having those conversations and, going, oh, I don't want to. I'm too nervous to call this doctor because he's probably rich, and I'm scared to talk to him about money. And the reality is, most of those, let's call them high income earners, they're also working 60 to 80 hours a week, right? And the biggest drawback that they have when it comes to wealth building, and you kind of embody this a little bit in the IT space. I'm sure you worked massive hours and you guys lived a nice life. You took great vacations. You were living the American dream as you put it. But where do you find the time to educate yourself on building wealth, right? So that when that W 2 eventually goes away, when you're 65 years old or whatever it is, you're able to continue that lifestyle. And I think that one of the biggest opportunities that we have, as wealth builders for our people is recognizing that most of the people in this country that have high incomes through a W 2 job don't also have the wherewithal time wise to go out and essentially learn an entire another vocation, which is investing to build legacy wealth. And that's where we come in. So that doctor that you might be a little nervous to build a relationship with because he's a very high earner, he needs what you're offering in partnership, because when he gets home at the end of the day, he probably doesn't want to take on a whole nother full-time job going and finding his own real estate deals, and he depends on partnerships like ours to go and secure that legacy wealth.
No, you're absolutely right. I mean, it's, just because you make a lot of money, you may not keep a lot of money. You have very expensive lifestyles, right?
Yeah. That's the real American dream, is to have a whole lot of nice things, you know. But that,
No,
yeah,
absolutely.
yeah,
And I think your listener may appreciate it. I think the best advice I ever got around capital raising is, everybody's like, oh, I got to have the right funnel and the right, social media strategy and everything else. I mean, it really comes down to personal relationships because you're not selling a $5 widget, you're selling 50, $100,000 investment. So
yeah,
the advice I got from my buddy years ago, and he's raised so much money, he's like, you just need to get out in front of people, right? If you can have like 2 meetings every week for coffee, lunch, whatever, with potential investors, over a year you'll have 100 people. 2 years you have 200 people that have known you, seen you. Hopefully they like, know, and trust you and will invest with you, right? So
yes.
it is, and so it takes time, but it takes personal connection, I think, until you build enough momentum and enough of a brand.
I absolutely. I mean, we I couldn't agree more. We tend to overcomplicate things in our very hyper connected society, and we're always looking for the next way to automate things. But especially in this business, when you're a fiduciary for people for lots of hard earned money, there's nothing like building a personal relationship, and I think that's it. That's so incredibly important to never lose sight of. You know. So you're investing all over the country. You've built a great portfolio. What are you seeing right now in the market that excites you? What areas are you excited about? How have things developed over, from 23 to 24 now that has you excited about the future, and what are you focused on now?
Yeah, I mean, it's obviously been a challenging year, right? As everybody, or 23 was a
Sure.
challenging year. I mean, I really what the focus is right now is really operations because we purchased a handful of deals that needed a lot of like rehab value add. So we're really focusing on operations and make sure we get that fully under control. I will say that what we have done um, switched a little bit to maybe something that's outside of multifamily. We've done a couple of light industrial deals. So last year
Oh
we
wow.
did a 35,000 square foot kind of warehouse with a bunch of different suites in. And it's interesting, right? The competition is actually less from a buyer standpoint on
Yeah.
the industrial because most people don't necessarily understand it. Again, I had a partner who had done it and he got me involved in it. So that's going really well. We did another smaller light industrial deal just to do something that makes sense in today's market because there's still I think a significant gap between sellers and buyers and what people are willing to pay and what people want for it. So
Sure.
we're just kind of, just being incredibly, um, just being cautious of where we go, right? So I would say improving operations is important for us. Finding some other asset classes that may work for us is kind of the thing, right? And then also, I definitely want to move into higher quality assets because I don't like the whole renovation, the heavy value add, just because of the risks and the uncertainties and costs and all that. So
Sure.
if we can buy a nice Class A that doesn't require a lot of work, that would be right up my alley right now.
Sure. I have an investment thesis that, more Class A deals are going to be out there because of the debt that it was financed with a few years ago when it was built. And so I think people are probably going to be looking for the ability to exit a little bit early before capital events are required of them. And so if you're ever looking to get into the Class A space and potentially make deals or find deals that wouldn't otherwise pencil with margins that work for you, if rates continue to come down, I think that Class A will be. I think I see more Class A deals coming across our desk than certainly the last 3 years. I don't know if you see the same thing.
I am starting to see some of that come up, right? I mean, we're underwriting a deal that's over $200,000 a door, but it's I would been scared to look at a few years
Sure.
ago. But it's like, yeah, decent debt, maybe slightly lower price. This may actually work, right?
Yeah.
And then, I think the thing is that you also maybe have to educate your investors a little bit and said, hey, the risk versus return here is lower, right? Because
Right.
you don't need to spend hundreds of thousands of dollars, $1 million of
Yeah.
on improvements So are you okay with a lower return, but at least lower cash flow along the way, but with a bigger upside whenever we decide to sell it in a handful of years?
I agree, and I think that's something that sponsors really. It's such a skill to be able to communicate the specificity of a deal to potential investors. I think that so many sponsors, and this is what got people into trouble. Maybe in the last few years with debt. The cost of debt increasing and things like that is. They put out deals with just all they were focused on is how can we make the returns, maximize the returns. We'll go buy Class C, and we got really low interest rates, and even if we have a rate cap, we'll put a bunch of money into it, and we'll raise rents 50% or something crazy. We get these crazy multiples that we're putting out on our webcasts and things like that. There's a lot of inherent risk in that, right? What happens if construction materials increase by 25%, right? What happens if labor goes up, right? With Class A, you may be projecting lower returns, and in your ability to communicate the story behind each deal, right? We're not doing a massive capex project. We're not injecting millions of dollars worth of capital into this asset, hoping that the business plan works out. This is a steady and safe play, with very little risk. I think that that's such a skill for people to be able to recognize and communicate well. It's not always about just the sexiness of the numbers of the returns. At the end of the day, preserving capital is as important, if not more important, than the return on capital. If things don't go according to plan, you want to make sure you don't lose
That's right.
money.
Rule number one, right? Rule number
Exactly.
two, look at rule number one.
Exactly, man. Well, I appreciate the time, Jens. I know that we're kind of up against it, but I know that you guys have some events coming up. I'd love for you to be able to plug. Where can people find you? So I know you got an event coming up in May. How can people find it?
Yeah, absolutely. Thanks, Brian. Appreciate that. So, one of the key things, and I just want to talk a minute about the
Sure.
background behind it. We do see these gurus out there that are selling coaching and mentoring, right? And yeah, they do a service, but sometimes it's a lot about, oh, look at how smart I am and look at everything I've
Yeah.
done. So we felt like, and that can be intimidating, and also it creates this like this sense of almost look at this guru type thing. So what we have done is we created an event that's much more focused on collaboration, masterminding, and just coming together as people that all have something to learn from each other. So it's called the Pay It Forward Multifamily Mastermind, and it's in Denver, May 2 to 4 at the Source Hotel. So it's a great event to come together. We keep it small, 50, 60, 70 people. We mastermind, we collaborate, we have some great speakers, we do a bunch of breakouts. So it's really a learning experience that people can come together, right? So that's coming up. You can put the link in your show notes. And if anybody want to join, they can use the code. Uh, it'll just be I think we can use Jens 2024. If you
Okay.
Brian, if you guys want your own code, we can also add something like that. Right?
Okay.
So.
Perfect. So make sure to check out payitforwardmastermind.com. Use the code Jens. We'll put all of that in the show notes as well. And then where can people find you online?
Yes, I mean, I'm kind of old school, right?
Okay.
OpenDoorsCapital.com is my website. My email is Jens, Jens at opendoors with an scapital.com. And if anybody want to jump on my calendar, I'm more than happy to offer a free 20-minute call for anybody that want to talk
I love
to
that,
me.
man. Appreciate it. Well, check out opendoorscapital.com. Make sure you check out Pay It Forward Mastermind May 2nd through the 4th in Denver. Check out deepbluere.com. Check out tourstudios.com. Jens, thank you so much for the time, brother. We'd love to have you back on. I'd love you to meet the other two hosts when it's not spring break and chop it up a little for a little bit more and hear more about your journey, man. And congratulations on all the success. And I'm looking forward to seeing what happens with you in the future.
Absolutely. Thanks, Brian. I really had a lot of fun, and I'll be happy to come back.
All righty. Episode 37 in the can. Thanks, everybody. We'll see you next time.